All right. Thank you for joining me for another Bitcoin analysis. I just have a quick update here for you. Nothing really new except for this massive impulse that just popped out of nowhere. Hello. So this move is very interesting as it seemed to have confirmed a much more likelihood that we have the bullish scenarios being the ones that are taking over here, and things can get spicy very fast. So I'm gonna discuss a few things to make a case for why it's probably still going up. I've already talked before many times about how my target's around 160k, 150k. It wouldn't be too surprising to see price just like zoom up there sometime soon. However, let me mute that real quick. Telegram. Excuse me. So, still, a pullback is not out of the question, like I have drawn out here, but it's increasingly appearing to be less likely. And I can get into the LA waves for that, just to give you an idea. Just because like this impulse is so crazy. This impulse is bananas. It's quite bullish, and it was very unexpected. I got stopped out of a few shorts, but thankfully I'm still sitting long, and so I'm in position here, and we're watching for pullbacks. But yeah, the idea is that we have this like completed ABC structure right here. This being an A, this is a B for a flat, and then this is a C. And now we have this impulsive five-wave structure, a corrective structure, and then another impulse, a correction, and then it should continue to the upside. There are people on Twitter that I see calling this an A, and then this is a B, and then we're going to get a C like that, which could be possible. This is a five-wave move. But you could call it a three-wave move, right? Some sort of A, B, C for a flat. Still, it's very weird looking, and it also doesn't breach the low right here. So it being a flat is kind of weird. This looks more like it does have a three-wave move characteristic to it. If you want to call it an A, B, C, it's very similar to this one. How it's an impulse, a flat, and then another impulse. But either way, I'm gonna show you the way I have it counted right here, so you can take a good look at it. We have the completed scenario, which is the most likely scenario in my case. And even then, though I have the pullback marked right here where I would ideally like to see it happen, it's pretty likely that it actually just pulls back much more shallow, something like this instead. Especially in these times of euphoria, even like this is an example, we got running flats happening like this, where it's not really going anywhere. It's not pulling back that deeply. Same with here, same with here. These are all like shallow, very shallow, like 236, 382 kind of retracements. See, this one didn't even get to the 38.2. So when the market is euphoric like this, the pullbacks are sometimes they're not very, very sharp. So either way, I have a long setup right here. In case it's the bullish scenario, I have some sort of long setup right here targeting all-time highs, like a TP1 off the all-time highs, and then full profit at these much higher levels, which I'll get into in a little bit. So as I said before, we have this ABC move here, a five-wave structure for the next wave one, and then we have very simple an ABC for wave two. This ABC is finishing off with an ending diagonal right there. So sorry, that's an ending triangle. The triangle at the end to mark the wave four. We have a 1, 2, 3, 4, 5 like that, and we have this odd looking triangle for wave two. It's very long, very flat and extended, but it works. So it is what it is. I'm gonna move this up a little bit. It's just amazing. Prices just continue just pushing through resistance over and over, and I've tried shorting it a few times and gotten stopped out. So these boys want to see it go, and I love to see it because I'm long too. So let's see what happens. This is the bear scenario, which still exists, though it's starting to get a little bit wonky, which is the one I've been talking about for a while, which is this corrective WXY structure. However, now we're getting this sort of flat idea in play, which does work, right? Because we do have a excuse me, we do have a three-wave move here, and it seems I haven't adjusted it, but previously I had it set as an A, B, C like that, so it would be a five-wave move. But this can be counted as a three-wave move here if you were to just put the A here, a flat for B, and then a C down. So I'll adjust that. We can adjust that. It would look more like this. Just like that. Nice and pretty. So this fifth leg, or this this flat corrective leg here, is a bit odd, man. Not to say it doesn't work, because it definitely does. And it would probably take something quite diabolical for price to just nuke down. There are some rumors about a government shutdown potentially happening on the 4th, and that one's hit or miss. I've seen some data that shows that it's, sometimes it causes reactions, other times it doesn't. So that one's not really a guarantee, but anything could really happen. So I can't, like, in good faith, I can't rule this out, because I'm the leverage trader who likes to play both sides, and I simply work with the probabilities of what's most likely. And for me, this is becoming increasingly less likely. However, it's still a situation I'm a play for. For example, Ethereum, I have this short running still to this day. I've taken profits on it and it was fantastic. And now it's coming up very close to entry. And I've taken another another short on it. Actually, I've just added to it recently. So the entry for the break even price is somewhere around right here. So if price just comes up and stops me out, it is what it is. But this is the position I'm holding in case of that much deeper retracement scenario. I could see ETH coming down here to 3,400 quite easily. So either way, we'll take profits once again as we move here, now that I've added to the position, just as a hedge in case price actually bounces off a trend line here and just keeps going. But yeah, I'm still playing for that bear scenario just in case. I'm sitting long on Doge right here, which has been fantastic, and looking to add to it if we get a nice pullback. So same with Troll, I'm waiting for a pullback here. If we don't get this pullback, then it is what it is. It's just gonna run. But it does look like it's developing this three-wave move to the upside, and it's gonna come down real quick and just wick that 11-cent region. So we'll see what happens. I do want to talk about a few more things. So there was a lot of talk about seasonality. How September was going to be potentially bearish, and in fact it wasn't, which is cool to see. This year has been the year coined of this time is different, right? It's just everything has not been aligning with previous history. So we'll see if that continues to happen. But October and November have consistently been the highest yielding point of the year, and so we can, if it were to follow that trend, then we're about to see some nasty moves to the upside, at least. Fear and greed, I don't really care for this metric too much, but it is an interesting data point. We got a nasty spike right here, and that could lead you to believe, the spike went up to 63, right? This could lead you to believe that, oh, maybe it's perhaps the market is getting a little overexcited over this move. But if you were to track it back to previous moves, for example, right here in April after the tariff lows, we got this like pretty sharp move up, and price just sustained a consistent grindy uptrend, and it didn't really mean much. Same with right here, went up pretty high, and yet price still impulsed up a little more. Same with November, just before November 5th. In fact, way back, we got this nasty impulse up, and yet price just continued grinding and grinding and grinding. So this isn't a meaningful data point to call for any bearishness, frankly. So another interesting piece is the order flow. Now, I haven't gone over this much, but order flow is, or at least the way that I observe it, is through the cumulative volume delta against Bitcoin and trying to observe the divergences between them. And it makes much more sense here on the high time frame order flow. So this is looking at the April low right there, and this this CVD line here in white is simply just the aggregation of market orders on this particular exchange that I've chosen here. And whenever you see this kind of divergence in price, where you have this big gap between it, whether it's to the upside like this while price is moving down, or it's like this where we have a downside move in CVD while price is moving up, it shows that there's a divergence in the way price is moving relative to the orders that are coming in. There's a lot of people trying to sell, but price is still holding up at these levels, which means that there's limit orders holding the price up that you can't see. CVD does not aggregate limit orders. So somebody is holding up the price with big money. And so this has consistently been a great metric for spotting previous lows. This, for example, is April, or not spotting previous lows, but let's say confirming or adding to confluence of move to the upside or downside. I use this for trading quite a bit. And if you look at this, this was the April lows. Sorry, this is the August 5th lows right here. And you could see that just as price was moving down here in April as a result of the tariffs, you can see that this big move down in CVD relative to price happened, and yet price just moved to the upside shortly after. This is August 5th. Just to give you another example, this was the low all the way to, on August 5th after the yen carry trade disaster. I lied. That's it right here. This is the yen carry trade disaster. And all the way at the bottom here was marked by extreme amounts of selling, yet price holding up reasonably well. So this consistently has been a great metric for spotting aggression at a certain key level and being able to capitalize on it. So we're getting the same picture. We have CVD making this huge move down, diverging from price action. And so that's consistently been something that we observe before major moves to the upside. And so yeah, I mean, that's pretty much the idea. The resistance targets that we have, price is currently sitting at resistance levels, very key resistance levels. And so it's not surprising to see a move down. But, it also isn't surprising to see shallow pullbacks and just continue grinding to the upside. Anything can happen. And so that's why we're holding longs. We have this this golden ratio multiplier that I have here as well as one of my main targets for price action later down the line in November, October, December, in the coming months. So a bounce right here at the 1.6 standard deviation doesn't seem too unlikely. In fact, it's happened quite a many times right here. It's happened right here. In fact, we hit the 2x standard deviation back here in March of 2024. So this has consistently been a decent resistance target for us, or for Bitcoin during this bull market. So it makes sense for us to get a decent rejection off of there, and then perhaps continued movement to the upside later in the year. But we can observe that as we get there. But yeah, man, not much has really changed. There's still a bullish. I still have a bullish outlook for the most part. It's just a matter of how we get there. That's what we're trying to figure out, and trying to catch some good trades along the way. So yeah, man. Hopefully that helps, and I'll catch y'all on the next one. See what happens.